Good afternoon.
Good afternoon.
Welcome to the business broadcast. We've been away for a couple of weeks, so I hope that everybody had a lovely Easter. Today, we've got a really popular topic, the smart way to get your business sale ready. So this is perfect for those owner managers out there who are running their business, or even if they've got a business that their manager's already running, but they're just, it's time for them to sell, whether it's retirement, they want to go and do something else, it's the optimum time to sell, whatever the reason for, we're talking about that today. And I'm delighted I've got my lovely colleague Nigel with me today. Hi, Nigel.
Hi, Nikki. Thank you very much for the invite. Hello, everybody.
Pleasure. So the reason why we've got Nigel here, Nigel's done hundreds of business transactions over the years. Obviously, he's super young, so I don't know how he fits it all in. I've been involved in around 100 odd transactions as well. So Nigel will lead us today on going through the various processes that there are in the sale to make sure that you do it the smartest way. See, there's someone there that wants to buy now.
Buy now, ringing. That's right. I do
ready to buy one of those businesses. So we're going to go through the process, but make sure you stay to the end, because at the end we have the top tips for ensuring that successful sale. So please do stay tuned, and we will share the top tips to make sure you get the maximum price and the most likelihood that you'll actually sell. Because that's the thing with SMEs, is often SMEs end up not selling and they just close, or they pass it over to someone else for no money. So we're looking at the ways to properly execute your sale. So Nigel, tell me about, just to start with, where do we start in this process?
I think, in fairness, Nikki, you kicked it off very well there, and it's probably starting with that fact that unfortunately, if it is left too late, then businesses have to sort of try and sell very quickly, so you don't then maximize the price, or there might not be the buyer pool that there would be if you did it in a more timely fashion. So I think what you've said there is the one of the key points is to prepare as early as you can. Always have a broad plan that you have in your mind, and there's certain things that can be done that actually sort of help you make more profits along the way. So I think I'd just basically, the first bit of advice would be to give yourself as much time as possible, so that when it comes to starting your exit strategy, you're not in a rush. So that's really where I'd probably kick off with. So do it in a timely manner.
That's a very good point, because people often ask me about when is the right time to sell, to prepare for your sale, and in fact, I often talk about that when the clients first come to me setting up their business, talking about, well, actually, what is your exit strategy from the start, because it's never too early to focus on, because then you're going to make sure that your business is being built up in the right way to make it most attractive for your potential seller. So even, I often as well ask them to think about who they want to sell to make sure that, so if it is, say, for example, a business got a very particular culture, make sure that's going to fit in nicely. But definitely, what you say, at the minimum, sort of 18 months really preparation, would you say?
I think, yeah, at the very minimum. And if you haven't got that amount of time, the sooner the better, really. But I think that's great advice, that when you're talking to clients, is really to sort of understand their roadmap. And that's what we try and do, is to understand, at what junction, so to speak, they want to sort of get off and let somebody else take the driving seat. So I think it's good at any point to have that discussion and see, when they're looking to exit. And even if it's 3 years or 5 years, there's certain things that make a business more valuable and make a more business more sellable and a bigger buyer pool. So all those things can't be just shoehorned in overnight. So the longer that period is, the better. And maybe likening it to sort of a motorway journey, it's better to then know you're going to be getting off at junction 15, and then the company's carrying on up the motorway, but prepare for it before you start the journey. And so a little bit, once you know where you're heading, the more value you'll get out of your company, and the easier it'll be to sell, and the more money we're able to get for business owners, really.
Absolutely. So, in the preparation process, I know from a financial perspective, you normally would expect to at least have 3 years accounts. So you want to make sure that those 3 years are good years. What other things should be looking at preparing in your preparation stage?
Um, I think basically there's two parts to it. There's the initial part that goes out on a generic basis, and it's to highlight the business in its best light possible, highlighting any unique selling points of the business, maybe the robustness of the income stream, those type of things that are put out on the various platforms and also used in marketing material. So that would then gain the interest. And I think the second part of it is obviously what is really the detailed profile, which is the selling document of the business, and that then really needs to sort of take the form of outlining the business opportunity in its best light, and putting forward the fact that as much as possible the business can be self-sufficient in its own light. And I think also it's important that to highlight any in vogue areas at the moment, maybe environmental credentials, or if you've
Yeah,
got
make sure that you've got any of your ISOs all up to date and all of those sorts of things. Yeah, your sustainability certificates and all of that stuff. All your processes and procedures done. Lots and lots of things to prep.
I, I, I think there's that, and also sort of if there's any element of technology within your business, it's to highlight that and try and bring that on, and sort of areas like that will help one sell the business, because it's a lot of people want to invest into it, but also it'll help getting the best value and the marketability. So there's that, but in general, it's like when you're selling your house, just get it in the best shape as possible, and it's all
That's it. Make sure it's
decorated,
got a fresh lick of paint.
all of that. Yeah, but equally, it's impossible to make it something that it isn't. So if it is, if you've got a terraced house, you can't be selling a mansion. So it's all horses for courses, but it's just presenting it in the best way possible, really.
Excellent. Okay, so you've done all that preparation, and now you're ready to actually market the business. What's involved in that typically, Nigel? So, for example, I know that what are the different sort of levels? Because obviously you've got the national brokers that do the minimum. What versus like your boutique practice? What sort of things should you expect the level of marketing to be?
So I, I think that's right. I think what we would do, some people where they're selling hundreds or thousands of businesses may just put it on a website and probably can't afford it the attention that we would. But what we'd do with the business owner is basically work out who their business would be worth the most to, and what that proposition looks like. And I think also, just going back to just slightly to the preparation side, any buyers, a lot of buyers will want to enhance the business, and so they may want to diversify. They may want to scale it. They may be doing a buy and build. So all those elements would go into our target market that we'd collaboratively put together with the business owners. So there'd be various sort of sections or business types that we would go for. So it may be external buyers, private equity, individual investors, or it may be businesses related to the core business that our client offers. And it's really discussing that and putting together a list of people to then target. And I think what we and some of the other more boutique brokers do is work that data. We wouldn't just write to them once, we'd then write to them, we'd follow them up with phone calls. We would make sure that full visibility has got to that potential buyer pool that would then be the most likely person to pay the most money for the business, and that's our prime target.
Absolutely. So when you then actually, so you've decided who to target, what other sort of methods that are you're generally using for that marketing?
Um, really, it's like any sort of marketing, and in truth, when you're selling your own products to a marketplace, you then just carry on offering it and marketing in a not then in a sort of an ongoing basis, so that it's been around a long time, but in a really targeted way. So we'd then actually personalize the messaging to each of those targets. They're probably a hit list of, say, that may start at sort of several hundred people, maybe 500 people, where we'd actually describe why we're writing to them and why we think this is a good investment, and highlight the actual synergies between our client and obviously the people we're approaching. So
And
it's
how
that.
many which is what I was surprised about when working with you more and more recently, is just how many that goes out to. That's literally, you're usually approaching thousands of businesses, aren't in some instances, in order to get that right client, that right buyer.
Exactly. I think you start your net wide, and then you start to sort of close it in. And as you're having conversations, there's certain areas that pop up where it's then of obvious of interest, and it's really who it's picking the people that who it's worth the most to. So
Yeah.
what are they getting? And it might be just selling some of their products to the seller's database, and synergies like that, which can help on both sides. So it's highlighting that, really.
Yeah. So it's a whole mixture, you said. We've got direct marketing, you've got website adverts, you've got um, approaching potential buyers direct from your database. It can be in some instances, it could be advertising in the right places. So there's a whole mix of marketing that is used there, isn't it? So it's trying to widen your net as quickly as possible in order to get that shortlist. So
Absolutely.
so the next stage, once you've done all of that marketing and you've then got lots of these buyers knocking on your door, how do you qualify the buyers for the seller?
um we would really, in the initial stage, is to let that take its course, because typically, depending on the sector, but in the majorities, from professional services through to manufacturing, through to marketing service companies, to printers, and certainly tech, we would generally get 30, 40, 50 inquiries initially, and so some of those we then just obviously have conversations with and really qualify them out before taking it to the sort of the next stage or the second phase. From there, we would probably end up with 20-25% of the buyers still in for the second phase, where they've obviously shown they've got the wherewithal and proof of funding. They've got the capability, they've got their experience. Finance houses would look at their CVs and just ensuring that would be they've got the relevant qualifications. If they're saying, yeah, I've got funding offers, the funders would want to know that they're able to run the business successfully, and their funds are in good hands. So there's all that process as a sort of second wave, and I think generally once we've had those conversations and understanding what the buyer's vision is, it then starts to find its way, who are the most appropriate buyers within within the shortlist, and then generally we'd have meetings from there, introducing the individuals to the seller, and that bit is actually more down to the chemistry of individuals and how they get on, because generally there's a transition period where both are working together, and you want the personalities to sort of get on as much as possible in that period for the good and longevity of the business. So they're the processes that we would then go through.
Okay, so the next stage, the actual outcome, what happens in that final stage of the sale?
I think we would then be talking to the uh, the inquiries that we've shortlisted, um, and the main point is actually what are the mechanics of somebody's offer? What are the ingredients that, how much is it day one? How much is it for the owners? What is the total consideration? And I think in certain instances, as we know, that can be how certain situations are dealt with, and that they're then sort of tackled in the most appropriate way. So it's the overall offer and not just the single price that somebody's saying, yeah, this is what we'll pay, and the terms of that as well. So they're the next stages whereby it sort of sifts out the most appropriate deal and the most comfortable deal for the seller to ensure he maximizes his return. So that sort of happens at that stage, really.
Excellent. So yeah, the perfect option, hopefully they'll have a range of offers and they can decide the best fit for their business.
Absolutely. Yeah,
But
absolutely.
it's not all just remembering that, it's not just considering the price, because there's lots of other things involved, isn't there? So you're thinking about the price, potential new consultancy, a consultancy perhaps with the people that are leaving, redundancy, all sorts of things. So it can be quite complicated to weigh them up, isn't it?
I think depending on the size of your business, I think for a lot of business owners that in the area where we work, maybe sub 50 employees, sub 100 employees, they're more like family orientated. Well, they are family orientated businesses in some respects. And it's also that a lot of them want to know that it's in good hands for the good of all the people that have contributed to the business. And so, as much of those emotional decisions go into it as well. But I think for business owners, when they've done their 30 plus years and built the business and ran it and had the ups and downs and everything, it's really it's to sort of try and maximize what they would get as a total package. and also they want to know when their exit day is. You know, they don't want to be going on working for the business, which unfortunately sometimes you then have seen if not the right buyers been chosen. So there's a lot of considerations, and you know, with all the transactions you've been involved with, Nikki, we'd both really, you sort of see those things as second nature. So there's just so
Yeah,
many
you
along the
weigh
way.
all of that up, don't you?
Yeah,
Um, and you know, and the statistics there. I mean, you know, we can't sugarcoat it. The statistics are there. Some acquisitions and mergers just, if they're not done in the right way, you know, do fall through and don't get what people want from it. So, you know, you want to make sure that you're going in eyes open, putting all the right buildings and blocks in place to maximize the success of that acquisition or merger afterwards. So, you know, because that's what you want. You don't want your legacy to be that your business got sold and it was stopped after 2 years. You want to make sure that it's continuing and it does very well.
yeah, and I think that's why there's sort of the ongoing ethos of the sort of buyer's intentions is also important.
Yeah,
I think where it is tricky is where there's multiple shareholders who may have a different agenda and things like that. That's then sometimes makes situations for slightly more challenging, but all, you know, part in a day's work, really.
absolutely. So we've got some questions that have already come in, so we'll go through those. But please, we have got time for a few more. So what I'll do now, if it's okay, Nigel, is we'll go through a few of the questions that have come in, and then we're going to go through your top 3 tips. So do
Super.
stay tuned for the top 3 tips because we're going to have them at the end. This is an interesting question in from Liz. What was the quickest and what was the longest transaction that you've been involved in?
Good question, Liz. Very good question. The the quickest, we don't tend to sort of get it. The quickest type, unfortunately, are some of the stress situations, um, which we don't tend to sort of get overly involved with. But those have to basically have to be transacted fairly swiftly, and I think really some are done a lot quicker, but probably the ones I've been involved with have been a couple of months, whereby that's been the case. But I know there's some that are a lot quicker.
Yeah,
Um,
so the quickest ones I've been in, and they probably actually still have taken a couple months to make sure the legals have been done. But I know that I was involved in business. They do all their due diligence in 2 days. That they just had a very swift acquisition strategy. So they were able to knew what they were looking at and be able to turn it around very, very quickly. But still, from the point of actually identifying the right business to actually signing, you know, 2 months is a really quick turnaround, really, isn't it?
yeah, no,
Yeah.
absolutely.
So, what's the longest one that you've been involved in?
Well, the longest ones, although in fairness, the ones that if I put my hands up that we don't actually sell or sell within our target time scale is where um, something's happened to the business figures, or you know that the business profile and has changed, or the clients that they were hoping to get in, or their existing long-term client has then reduced their order book or something like that, and then in a way we've had to remarket and go again with that company. So and that does happen, and it's life, but it's all part of it, and we just go again and offer it. But I'd probably say where it's probably been at about 18 months, maybe slightly longer, maybe 20 months, whereby we've it's taken to sell it. And I think
Mhm.
also it's the outside environment, and funny enough now it's very active. Or not funny enough, you know, people have decided after the COVID years and things like that, enough's enough. But where it was, and I think we've spoken about it before, Nikki, the Brexit years were very
Oh, they were.
indecisive,
Yeah,
and
that was a terrible time for all
yeah,
sorts of transactions. Yeah.
and I think that's been the most worst. And the what example I'm thinking of was actually during that period.
Yeah.
So there's also external factors as well to consider.
Yes.
So
Yeah. No, 18 months I think was the longest one that I've been involved in as well, and it was, in fact, I might have even been slightly longer than that because it went through 3 different due diligences because it was 3, it kept on, had a buyer, then they'd drop out. Then there was another buyer, dropped out. So it went through 3. It was the third one actually did fully go through, but that was a long process of going up and down there. It was, yeah, it was painful, but it was
yeah,
done, which is good. And they,
which is
but the
getting across the line.
buyers got a good price, so it worked out all okay in the end. Um,
Good, good.
okay, so we've got another, I think this is more a comment than a question. Um, I might just be missing where the question mark is. So this is from Harsh. When we are in the service provider segment, like digital marketing, how can we provide the value addition to our customers I understand this, right? Yep. As there are many competitors across the segment and the same service is provided by many. That's a very good question. Now, that is actually relevant to a lot of different sectors that we look in, isn't it? You would think, well, why would people be buying when there are so many very similar businesses? But, if there's, well, I'll let you answer first, Nigel, before I put my two penneth in.
No. Honestly, you carry on, Nikki.
Well, I was just thinking. So you have this in accountancy and lit law. It's still, essentially you're selling the same thing, same as in digital marketing. You're selling the same thing, but there are still huge amounts of differentiators between them. Although you think, oh, it's exactly the same, actually, the processes, the people that are involved, the client base that you've got, lots of those different things differentiate those businesses and therefore change their value and change the worth of whether actually somebody wants to buy them. So some you may get some people in the sector that are just trying to buy up lots of their competitors for market share. You may have a PE firm that's got a strategy of building up a wider diversified business and buying up multiple, sort of the best of the breed in different areas. There's even though you might think it's exactly the same as anything else, actually there still often is a buyer out there for you, isn't it?
I think, and that's a great question, Harsh. And just following on from your market share point, Nikki, I'll try and keep it brief, but sometimes more of the same is great. And if you have more of the same repeatable stuff, that the company gets very good at that. And so it's good to sort of increasing that hub of the business. But I think the next point is what Harsh said was, how can we provide additional services?
Oh,
And
yeah. Sorry, missed that bit. Yeah.
no. And then it's good to sort of add on, but then that's the challenging bit, as many business coaches will tell you. The challenging bit is then new stuff, but your existing markets, maximize that as much as possible. But equally, if you do that, then that is what your business is worth, that sort of repeatable income stream that you do
Yeah.
very well. So sometimes you don't need to go into
Too much
providing additional
diversification.
services. Yeah, exactly.
Indeed. Okay, we've got one more quick question. Let's do a super quick answer now, and then we'll do our go through the top tips. So this one's from Paul. What's the normal time a seller would be expected to remain in the business, and how would payment be staggered? Oh, he slipped into questions. And how would payment be staggered?
That's a great question, Paul. Yeah, it can obviously vary. It depends on the buyer and whether they've got existing personnel to take the reins or not. Um, depending on the sector you're in, there'll be a client handover period that we've spoken sort of many times about in previous in some of your previous sessions, Nikki, and I think those would be a client handover probably needs to be a year if we picked a number, graduated a time scale. And I think if a business is very self-sufficient and looks after itself, and the buyer has, you know, MD sitting in the wings ready to take over the reins, then that can be a lot shorter. But on average, I'd probably say a year to 18 months. And regarding the payment and consideration, it's
all up
very
for
rare.
negotiation, isn't it?
Well, it is really, but
Yeah.
I'd say unfortunately it's
That's
very
the quick
rare.
answer.
Everything's day one.
But yeah, sometimes day one can be over 2-3 years, depends. Okay, so quick top tips. We got 3 top tips that we discussed earlier, wasn't there, Nigel? So do you want to get bashed through those 3
Yeah,
before
just
we
quickly,
finish?
how long have I got? I mean,
Yeah, no time.
basically, it's make sure your business is ready for sale in its best
Yeah,
shape possible. Then I think make sure your broker has a tried and tested strategy for hitting the target market and making sure all the buyer pool has visibility. And
yeah, you
then
want to get the best broker,
that's
as
right.
in Nigel.
Thank you.
Yeah,
But also, I think then when you're supplying information and the delivery and quality of information in the negotiation period, get that ready and sort of pass it on as quickly as possible so that nobody's waiting and the deal doesn't lose momentum, because that can also be a deal killer, and then you have to start at the beginning again, or not quite, maybe stage 2. But they're the 3 tips. So thank you
absolutely.
again.
So make sure it's ready. Make sure you get the right broker and good quality information, and make sure it's all, you know, communicating well with the buyer.
And maybe
Excellent.
channel through your
Channel through one,
accountant.
yeah.
Yeah, one
Oh,
person.
obviously the accountant. Yeah. Excellent. Thank you so much, Nigel. That was really, really
Thank
useful.
you, Nikki.
And yeah, and obviously it was incredibly popular, this one. So that's really good to hear. So please do. So where can people get hold of you, Nigel?
Email address is nigel.elkes@thebusinessboard.co.uk, or obviously through LinkedIn. If you're friends of Nikki's, obviously I'm a connection, so LinkedIn either way.
Yeah. If you can't find Nigel, look for me, Nikki Larkin, on LinkedIn under Orange Accountants. But yeah, thank you so much, Nigel. Really, really good, really good.
Thank you.
And we'll have another. We'll meet up again in our last one in the series in May as well. So
Brilliant.
thank you very much.
Pleasure.
So next week it is, we have for Guy fans, we have Guy Smith back, and we are talking R&D tax credits. So that's a really good, really topical area, and some businesses just don't even realize that they could actually get it. So do join us to find out whether, you know, does your business qualify and how do you go about claiming those credits. Anyway, thank you very much for now. Thank you, Nigel, and have a lovely bank holiday weekend. Don't turn up for work Monday unless you have to, but otherwise it is a bank holiday. So cheerio.
Cheers. Thank you.